Hi fellow traders, I'm making this video to share my USD JPY analysis with you. First of all, let's talk about the fundamental situation which dramatically changed the movement in USD JPY. So if we go to weekly time frame, we can see it has been uptrending for 2 years. Daily time frame, it has been uptrending for such a long period of time because of the carry trade. People have been making money on the swap. So even though gain on daily basis by pips was not a huge number, but together with the swaps it was a significant gain for the buyers. That's why USD JPY has been going in uptrend, and whenever there was an intervention by Bank of Japan, we saw such kind of sharp downside fall for a couple of days, and then market continued to the upside because of the carry traders. So now what we have today in this USD JPY in terms of our technical setup combined with the economic data. So the interest rate reduction has already been priced in. I mean, even if there will be reduction in the September, that will not be a news because market has already anticipated 25 to 50 basis point cut in the market. And Bank of Japan suddenly gave a surprise. So if you look at the 4-hour time frame, this is when Bank of Japan took the decision of raising the interest rate from minus 0.1% to 0.25%. So it was a 35 basis hike. But if you look at the market, this is when Bank of Japan decision came, but market already started moving down because this news was kind of leaked, and I personally read the data directly from the Nikkei about this leak that they are considering 25 basis point, and Nikkei is a genuine source of information. And then it went down, and then when the news confirmed it, then it rapidly went down. And further we saw that weekend non-farm payroll, weekend PMIs, all poorer data coming from the US actually sent USD JPY directly from 156 area to 141 area. It was a huge fall and very sudden fall. But many economists, including some sitting at the JP Morgan, believe that there is no end for the carry trade yet. So still there will be upside room for the traders to enter buy as soon as they see any positive data from the US. So what you'll have to do is to look at the calendar, and I'm not talking about the free calendars available on the internet. You need to have direct source of data where all data is directly synchronized immediately. All news is directly given. It shouldn't be like a pending and coming after like 30 seconds or 1 minute. It should be immediate. So you should have paid data source for your calendar, and you can arrange it yourself. And once you get a positive significant data from the US, you can enter buy position in USD JPY. And what you can target 50% of recent swing from here to here, which will give you a target of 148.44 area. Please note that the move to the upside is not going to be as fast as the move to the downside. This is going to be gradual, just like the fashion we have seen in the past. For example, you can see these kind of moves. This has been very gradual move. Whenever there was a downside move, it was sharp like this, and it has been even sharper. But upside move is not going to be comparatively sharp. So we have to be patient. And what we are going to trade here is something called double repo pattern. We can have double repo pattern on the both time frames, 4-hour and daily, but we will go for the shortest possible target if it will satisfy our risk. I mean to say that our reward shouldn't be less than the risk. So let's look at the daily and 4-hour time frame, and we will make our mind up what we are going to use. Alright, so if we plot Fibonacci on this daily swing, then this swing will be counted from this point to this point, and then our 50% target will give us a pretty higher price level, which is 151.6 something 6. 69 or 70. So 151.7 roughly will be our target, which will also coincide with this previous swing low. Previous swing low, which was a support earlier, it has turned to be a resistance now. So this will be the second resistance, and the first resistance is something what I have already shown you on the 4-hour time frame, where our swing high and swing low will be measured not from here but from the very recent movement from here, and then our target will be this area. So let's say if we get the opportunity to buy and we buy, what kind of profit we can make. This is a 3x3 moving average, simple moving average, the dotted line, you can see this one. So this is 3x3, a moving average of 3 period with shift 3, simple moving average. So market, if the market is falling or rising above this moving average with very fast speed, and then if it comes like this, goes and breaks above the moving average, again it comes and breaks below and stays. I mean, if it stays below, when I say stays below, there has to be at least one candle closing below this moving average. So if it closes below and then again it goes up and closes above this moving average, this technically confirms the buy entry. But I don't want to simply be dependent on this technical setup. I also want this to be combined or triggered by any positive US economic data. That is why I said we need to wait for any positive US economic data better than forecast combined by this setup, and then we will enter buy. So this is already on the 4-hour time frame, and we can see that market has gradually started making higher histogram, and we can see the signal line has been crossed to the upside by the histogram line. If we join this border of the histogram, so this is some sort of crossover here, which is slightly bullish sign. So this is all we have on 4-hour. Obviously your stop loss will be below the point from where you enter. For example, right now if market closes here, then makes another candle which closes to the upside, your stop loss will be below this point and your take profit is here. Another scenario is there on daily time frame, where we'll have to draw this swing from this point. We'll have smaller stop loss, pretty bigger take profit, and this is also supported by the current oversold condition, which has been shown by a relative strength index, which is now something around 21.5. Pretty oversold, and correction is inevitable. All we need to find is the right time to enter for the corrective wave. Corrective wave will be triggered by technical as well as economic data. So we need to see the data and wait for the entry, and then we have to ride the corrective wave. Should I suggest to wait until this? No. There are a lot of significant data coming in upcoming week. Not this week. This week is pretty, I think, quiet. But next week, there are too many important data scheduled from the US next week. So we would like to get out of the position by making whatever profit we have this week, if we get the triggering factor already. So rather than going for such a higher target, I will simply take this 4-hour trade. So concluding it, let's say we are going to enter here or somewhere, sorry, not here, we're going to wait for the double repo. This pattern is called double repo pattern, and this has been used in the past by a great trader called Joe DiNapoli, and it really works in more than 65-67% cases. Forget about 90% accuracy. That is a myth. The people who talk about 90% accuracy are the people who make 1% profit per trade in 9 trades and lose 10% in a single trade. So they eventually end up in loss despite having 90% accuracy. So all of these things these things are said by robot sellers to fool you. 60%, 70% accuracy is a great accuracy. And this setup of Joe DiNapoli has more than 65% accuracy according to my own experience of 13 plus years. But when I say about my experience, I never traded this setup according to the technical scenario, only according to technical scenario. I always combine with the economic data, which is why my accuracy has been more than 65%. And I do not know what kind of accuracy a person can have without economic data combination. So that's why I told you, let's combine this with economic data. Now, we do not have precise entry point, we do not have a precise exit point, but we can simulate that. Let's say market goes here and economic data come, and then our stop loss will be something like this, 183.9 pips or 179 pips, and our take profit will be something around 293.3 pips. So this satisfies my trading criteria. Alright, that's it. Thank you for watching.